Hey guys, how are you doing? Over the past few months, several small cap stocks I've been watching have made huge moves. One of them went over 300%, and most traders never catch these moves. In fact, they buy too early, chase too late, or sit in stocks that just go nowhere, and we all know that feeling, right? Today I'm going to show you just one stock that I've been following for a few weeks now called ERAS, ERAS, and I'm going to show you how to find these stocks, and we're going to have a look at ERAS and look at the movements of price, the movements of volume, and the movements of the RSI. So what we're doing today is we're in the TradeVision software here, and it's a nice bit of software. You can download the app or just use it in the browser. And it's got some cool things. Link in the description below. Please use that if you want to have a look at it. It's got a free trial built by a friend of mine. And I'll show you how I found this stock. And I want to go through the ERAS chart here with you guys. So I bought in on the 4th of December. You can see it down here. And this is what the chart looked like at that point. What it's done is there's had a little breakout. They had a nice earnings, and they had a nice pop on a little bit of volume, and that kind of was the sort of buy signal there. This big green candle, because it's breaking out to new highs, and that's all I do, right? So if you have a small trading account, I have a trading account of about 100,000. 80,000 USD, and it's a relatively small account. Some people don't have 80 grand, some people have got millions, some people have got $1,000, whatever. We're all at different stages in our trading life, and a really quick way to grow your account is just by following breakouts. What does breakout mean? It means that a stock is moving beyond a previous point of resistance. So it's had a sort of double top here. It hit that. I mean, it went all the way up to 276 and came back down again. And so the sellers came in and pushed the price back down. And then a few days later, it came up again and hit the 260 and again got pushed back down. So that was a very significant point of resistance around that 265, 270 mark. And then one day, a few weeks later, it popped above this price for the first time in a very long time. So if we go back, through the months and months, we can see that that price there was kind of significant. There's a much more significant one up there. That's probably when I got alerted by this software that there's a breakout. I'm not sure how long the definition of a breakout is. Is that a breakout? Yes, this is also a breakout, I think it just goes on and on. It uses like the lowest points, and it says, okay, this is a breakout, this is a breakout, and these are kind of fake outs, right? Because they pulled back again, but this was the real deal, and you can see here volume starting to increase, which means there's more activity in the market, therefore the price is starting to move in a very interesting way. So you don't really want to be buying in here. And so what this down here, relative strength index, the RSI, it tells you basically when the price is a little bit toppy and you probably don't want to be buying. When a stock goes on a crazy run, it kind of becomes irrelevant, because you don't really want to be buying that 72 peak, because it's going to come back down. But I'm getting ahead of myself here. So this was how it was looking short term, right? And that's kind of your buy, right? You want to be getting, or this was definitely the buy. So I was a little bit late to the party here. I was watching and waiting far too long, and then this sort of confirmation, okay, it's having these healthy pullbacks at it's respecting this 20-day moving average, which is what we like, and it's kind of going higher. So I got in here, and it's a very reasonable time to get in, and so it goes up a little bit, it pulls back, and this is what stocks do, right? They go up, they come back, they come up, come back. You don't really want to be getting in here. That's kind of unfortunate. You probably would have been stopped out there, because if you'd bought here and it's had how much of a percent of a pullback? Yeah, so I wouldn't be holding on to a stock. If I bought in on this peak, I would have been stopped out there, because I put in a 10% stop loss, and that's my risk reward profile. I don't like losing 20% on a trade, so I would have been stopped out there. So there's a little bit of luck involved and a little bit of timing. So there's no kind of huge candles here, and then you've got a big one coming in. And so I got in here, and what happens next? So if we just cut out that huge explosion there, so big red candle there, that's a little bit of a warning sign. Maybe he's trying to shake people out, but I got in here. So I this trade worked out really well for me. So I got in here and I would have put in a 10% stop loss. So if it had come down and smacked the 294 mark, I would have been out. But fortunately, it kind of respected that line there. Not for any particular reason. I mean, it's running along the 20-day moving average, which is usually quite a good sign. And then, let's see, how many days was that? So I was in profit pretty quickly. 1, 2, I mean, it was 5%, 15% after 6 days, and it came back down to almost nothing, 2%, and then back up again. So it was kind of consolidating a little bit. But as I say, fortunately, never came down anywhere near my 10%, so that was great. And then what do you know, suddenly this huge volume comes in. So it was trading at around 2 million. And then nothing happened really. It was just, there was a nice positive earnings and it had a little bit of a run. And it's at 1.6 million there. And then suddenly someone drops 40 million times almost $4. So it's 160 million someone dropped. And the price just exploded. And so what happened next? It goes up and up and up. And so I'm looking at a chart like this at this point. And from my previous experiences, you know, I've always said 100% is totally fine on any trade with me. That's okay. And so it went up and up and up. Basically 50% in just one day, and then 75% in 2 days, and then 100% in 3 days. And at this point, I'm thinking, okay, this has gone a little bit parabolic. I'm a little bit nervous now. And I put my stop loss in. It closed here at 676, and I put a stop loss in here because I didn't want to lose my 100% trade. And I'm thinking, yeah, 100%, that's amazing. I've doubled my money in, well, how long? Let's see, how many trading days? So 24 bars. So I guess 5 divided by 24 is almost 5 weeks. So I doubled my money in about 5 weeks, which is pretty fantastic, isn't it? Really. And I put my stop loss in there and got stopped out at 100%. I was feeling pretty groovy, pretty happy. So if you can find with this software, of course, if you want to, and I'll show you in a second how we find breakouts. And I'm actually going to run through a few absolute bangers that could be the next ERAS in just a second. But people will make long videos about trading and making things incredibly complicated, drawing trend lines, looking at all kind of Boolean charts and drawing lines over the place and all these different indicators. And trading is not really that complicated. It's really not. A stock is going to go up, it's going to go down, it's going to go sideways. That's really the three options that it can do. It's like a two-dimensional chart here, guys. And all you need to do is follow the volume. Okay, follow the volume. And you know, okay, so you missed this little run of whatever o'clock, 45%. You missed that. Okay, not a big deal, but you can still get in here at $5 and make 30% in just a couple of days. There is nothing wrong with 30%, guys. Anyway, back to the story. So I make notes on my charts here. I got stopped out at 672. So what happened next? Let's see if I can shrink the chart down. And so it had this kind of little pullback here. I got stopped out at 672, 100%. Thank you very much. And off it goes. And it carries on and carries on going up. Have you ever seen a chart like this? It goes on and on and on and on. And at this point, I'm watching it thinking it's going to collapse at any minute. I'm not going to get back into this. I've got my 100%. I'm quite happy. And it's gone up and up and up and up. And for some weird reason, my little line indicator has moved, which is super annoying. So I got in here. I missed all of this. I should have gotten back in here, a huge green candle. I just couldn't believe, I'd never seen a chart like this before. I just couldn't believe it. Anyway, it's gone up and up and up. And after being utterly infuriated with myself, infuriated and furious with myself, I saw this pullback. I've been watching it all this time, so I've missed out. I mean, I was busy building my YouTube channel. It was a very time-consuming thing. That's my excuse. I missed out on another 85%. And so on this pullback here and this pop, I thought, yeah, okay, I can see it now. And so unbelievably, this stock has just gone on and on and on. And even post-market, 24%, it's almost another 2% post-market. So we're now looking at ERAS, and it's trading at 1573. This is, I got in here, so there's a little note about stop losses. I got in here at 12.49, let's call it 12.50, and my stop loss is 10% always, so $1.25, so 11.25 is the stop loss. I see, I said I've moved it 12.22 here, so 11.25, just there. So 11.25 was the stop loss when I entered on this day. I got entered right here because I'm not awake when the market's open. Or I'm not awake when the market closes either. And I don't want to sit looking at the stock market all day. It's depressing and really boring. And I don't want a second job. I want trading to be my passive income. And I'll have to do another video about that as well. And so I got in here right in the tip of the candle, and it's come all the way down and come back up. And right there, 12.49, so that's my 10%. And it never really looked like coming back. I drew in this trend line, it's kind of respected that trend line. It's now moving away from that trend line, which is just unbelievable. And so I'll move this back to 11.22 because I'm a bit anal, 12.22. And so what I'm going to do tonight is I'm going to move this right up to, well, I'm going to have to move it past the break even because look where it is. It's at 15.73. So the reality is I'll probably move it in. I like to deal with my stop losses manually. I don't do trailing stop losses because it feels a bit arbitrary to me in terms of, you know, I like to move it underneath candles in previous instances of support. And people use average true ranges and all this crap. And basically, if you just do it by eye, it's the same as an average true range, which is the sort of technical way of figuring out a stop loss. But I don't bother with that because it's super tedious. And so it's opened here, it's come all the way up here, it's moved down, and post-market has gone back up. Where would my stop loss be? Well, if we start with 10%, let's call it $1.50, that's 14.20. So 14.20 would be way down here, which seems like, actually looking at it, the bottom of that candle, I mean, what does it do in the past? It's kind of dropped down that full length, it's dropped down that full length. That's just a huge, and even on the down days it's not moving very much, so you could quite reasonably put your stop loss in at 14.68 and lock in. What have I got now here? So I'm sitting at that doesn't work, bit of a flaw in the software. Oh, and if you go the wrong way, anyway, 20%, so another 20%, and there's absolutely nothing wrong with 20% trades. If you can make 20% on all your trades, oh no, more like 25. If you can make 25% on all of your trades, you will be absolutely laughing, my friends. Okay, so that's ERAS. I'm going to move my stop up to the bottom of that candle, $1.50, 14.20. Yeah, I'm going to move it to 14.69. I'll put a little mark in there. And there is this thing about stop losses, you know, amateur traders move their stops up too tight, and, you know, proper traders kind of let their winners run. And I'm letting this winner run, but I want to keep my 25%, thank you very much. And post-market is looking very strong. There's not a lot you can do if a stock, you know, shoots down and comes all the way back up, as you see occasionally, and then you get stopped out. Who cares? Getting stopped out is all part of trading. Don't make that mistake. But it's kind of respected this trend line here, apart from the occasional dip, and then it's just blowing up away from it. So ERAS continues to explode. Let me, I'll do it in another video. I'm going to do another searching for breakouts video very soon, possibly today or tomorrow. But I just wanted to show you today how very simple it is to get in on really great small cap stocks. And it really is all about volume, guys. And if someone is dropping 160 million on a stock, do you think that person is likely to lose money? No, because people who have got 160 million or $1 billion, they know something, and the stock's probably going to go somewhere. The chances of this stock popping and then coming back down and doing nothing are almost like 100 to 1, in my opinion. You're not financial advice, but you don't really see huge pops like this and it goes nowhere. We're all looking at the same charts, and this is just absolutely extraordinary. So in a nutshell, you can use this software if you like. It'd be great if you can give me some feedback on the software. And it's really easy to find breakout stocks. In fact, I'll very quickly show you on home. We go to the home tab and you just click on breakouts up in the top left here. And what it does is I don't know how it works. I think it's the last week, so it might reset on maybe Sunday morning or something. It goes back to Monday. It always shows 4 basically, and so Thursday being yesterday. And it does it kind of in order. So the most expensive stocks at the top, and then the prices come down. So a little bit arbitrary. There's $4 and $18 and $3, but basically the cheapest one generally tends to be at the bottom, and the most expensive one at the top. And just a quick, exciting stock. So how I find, or how I choose breakouts, let's compare a couple of charts here. This is a good example. So CMU MFS high yield, whatever that is, it's not important. So this stock has been up and down, up and down, up and down, up and down, and then a huge collapse. That's not something you want to be a part of, is it? 350 to, well, that's not that big a collapse, but it looks quite radical here. And then all the way down through this trough and then back up. And let's be honest, who knows where the hell it's going to go next, right? So I don't really like stocks like this. I mean, it's hitting this huge point of resistance up here. And maybe if it breaks out beyond, 375, you might want to look at it. But for me, I have found that the most explosive stocks, and ERAS is one of these stocks, is that stocks have been consolidating and doing nothing for months. So this is just over 2 years ago, and it's done nothing for 2 years. And this is just, I don't even know what this is. This is algo trading or some gobbledygook, but nothing's happening. And all of a sudden, it's popped. And in my experience, it's very rare that there is just one breakout like that. Generally, it pops, it'll have a little bit of pullback or a big pullback, and then it will continue to go higher. I wonder if there's anything here that shows you multiple breakouts. I mean, this is quite an interesting stock in itself, CDRPC. I mean, you can guess where that's going to go next. So it'll have a big pop, then a big pullback. But that's something to look at. I want to see if I can find one with multiple breakouts. It shouldn't be too difficult. There you go. So it's very rare that the first breakout is the last one. It's very rare you will see this breaking out and then just collapsing down to nothing. And lo and behold, $3 down to 240. So if you'd bought that breakout, you would have got crushed. $3 down to 240. What is that? 20%. So you would have got crushed there, but you want to be buying the dips. And so if you bought that dip, you would have been okay. And just, what's that date? Jan 12th. So just 3 months later, and you've almost doubled your money in that little short space of time. So the first breakouts are generally the first time to get in. You want to be looking at the dips. See, look, there's the first breakout, pullback, and then just explosive. And I doubt very much that that's the last breakout on that stock as well. We'll do a deep dive on these a little bit more, but I just want to show you guys that. And that's really, I mean, here we go. BAK, the first breakout. This is what you want to be looking at. This is a huge pivot point, a change in sentiment towards the stock. Somebody knows something, and here we go. It's happening. $5. We'll talk about this in depth much later. Anyway, please don't like the button. Press the button that says like. That'd be really great. And then subscribe if you like for more small cap updates and news. And check out that video over there. There's plenty more. And I hope to see you soon. And peace and love, and keep waiting for breakouts. See you. Bye.